Use it wisely.
Hello there and welcome to On the Table. I'm your host Brendan Lepol with the all-new RTM ASEAN block. We're broadcasting on RTM Click and MyTV's Berita RTM channel, which is also live streaming on YouTube. On tonight's episode, in the next 30 minutes, we'll be unpacking Malaysia's accelerated economic growth, which came stronger than expected. We welcome to the studio Dr. Muhammad Afzal Nizam Abdul Rashid, Chief Economist of Bank Muamalat Malaysia Berhad. Good to have you with us, sir. But before that, Doctor, let's take a look at the recap of Bank Negara's report last week on Malaysia's second quarter economic performance, which is relevant to our discussion tonight. So, Doctor, let's have a look.
Malaysia's economy expanded at its fastest rate in 18 months in the second quarter, helped by stronger household spending, exports and investment. Gross domestic product grew 5.9% in the April to June period, accelerating from 4.2% in the first quarter and surpassing early government estimates for a 5.8% rise. Growth in the period was the quickest since the fourth quarter of 2022, when the economy expanded 7.4%. The ringgit appreciated 3.1% against the US dollar for the year until 13 August 2024. The central bank governor, Datuk Sri Abdul Rashid Ghaffur, said the ringgit is moving in the right direction as it reflects the nation's economic fundamentals and strong prospects.
The recent strength in ringgit performance is some form of recovery from the past performance, and it is moving towards the right direction in terms of being more reflective of our fundamentals and the strong prospects of the economy. In terms of whether we have comfortable level for ringgit, we don't target a certain particular level for ringgit. It is market driven. But of course, what we have seen and what I said earlier on in terms of the support for ringgit moving forward is positive.
On inflation, the governor said the impact of the recently implemented diesel subsidy rationalisation remains manageable. Therefore, he said the projected headline and core inflation for the year will remain within the 2% to 3.5% and 2% to 3% range, respectively.
There you have it, the central bank's report. Lots to talk about, lots to dissect. Would you say it's a pleasant report? But of course, before that, Doctor, what were the key drivers behind Malaysia's stronger than expected, and of course anticipated GDP growth as well in the second quarter of 2024?
Well, obviously, there are two main engines of growth in any economies. There are domestic demands and also the external sector. In the Malaysian case, both engines are firing up both cylinders.
Right.
So I think those are the main engine of growth, and it's been growing at a faster pace, which actually resulted in the economy growing at a rate of 5.9%, which is exceeding from what the street estimates, which is about 5.8%. In our case, we were looking at 5.5%. Wow. So it was really surprised on the upside, and it goes to show that our economic growth has been resilient despite having to contend with all this rising cost of living, rising cost of doing business. It means that the economy can actually withstand this with all these challenges.
Right. The netizens out there, they're exposed to the news that, okay, Malaysia's GDP is on the right trajectory. Would you say it's literally exactly where it's supposed to be and it could be better in the near future?
Right. I think we are on track. In fact, I think there could be a chance, the economy could settle much higher from what it is. I mean, in terms of their forecast range of 4% to 5%, it might settle at the higher the upper range of the forecast, and it might actually surpass slightly more than 5% given the current momentum that we have now. So I'm not surprised if we actually can end up higher growth for this year.
Nice, fantastic, pleasant news there. Now, which sectors of the economy performed particularly well, in your opinion?
Right. I think all major sectors, were recording positive growth, but notably, I think it was construction.
Construction?
Yeah, it grew by 17.3%. It has been quite some time in terms of growing at double-digit pace, and this is very much in tandem with the more spending on the infrastructure projects like ECRL, MRT3, and I think constructions of the likes of data centers.
Right.
Those are the key things that actually powering our construction sector. And we can see that even in Bursa Malaysia, construction sector are one of the best performing sector in Bursa at the moment.
Right. Yeah. So when it comes to construction, this particular sector, we can also relate it to consumer spending, right? Let's also talk about investment,
right.
the other side of the picture, and trade. Now, how this contributed to the growth of our economy?
Right. Yeah, I think obviously the economy from the demand side predominantly been driven by consumption. But I think another side of it, if you look at investment, is also, like you said, is growing at a I would say at a good pace actually. In fact, for private investment, it's growing at a rate of at a double-digit pace, 12% something. So in that sense, it shows that the economy, especially among private firms, they have been spending to upgrade themselves.
Right.
In terms of investing in their machinery and equipment and making sure that they are able to become more productive.
Right.
And in the process, perhaps there will be more demands for labour, and hopefully there will be more demands for highly skilled labour in the process. So these are the positive things that we saw in the Q2 numbers, and perhaps it might carry through in the second half.
Right. You just mentioned positive things that we saw. I think to get a better picture, a bigger picture, and a brighter one, we need to do some form of comparison, right? So how this second quarter growth rate compared to the same period in the previous years and also the preceding quarters?
Well, I think at 5.9%, obviously the economy is growing above from the past historical average.
Right.
If you look at historical averages from 2010 up until the latest quarter, the average was around 4.6%. So we are growing above from the long-term historical average. And that goes to show the economic activities have become more lively. And of course, that because of the more activities in the tourism-related sectors.
Right.
We can see a lot of activities, like I said, in the construction space. So these are all, factors that actually contributed to the higher growth that we experienced during the June quarter.
Doctor, when you just mentioned on average like 10 years ago, 2010, so on and so forth, did we take into consideration of the pandemic that just hit us recently?
Yeah.
Are we putting that aside, or are we talking about on average the growth of the economy of Malaysia?
Yeah, that's pretty much like, on average. And then, of course, we take into consideration what happened in 2020 and 2021. So that's basically you want to see what's the standard in terms of the trajectory of the growth. Right. So obviously, at the current juncture, we are growing above from the historical average. So it gives the signals that I think what the government is doing now is on the right track. What is more important is to make sure that the government actually relay the message to the masses in terms of the reforms agenda. Yeah. Because obviously these measures are obviously not. It's very unpopular, but you can see it's gaining more traction now. Yeah. So yeah.
Like I totally love the word that you just mentioned. It's unpopular just as yet, but of course it's only going to get better in the future. Would you say that this is a significant acceleration when it comes to economic recovery?
Yeah, I think we have managed to record a respectable growth. Obviously, if you look at further details in the numbers, I did mention about the two growth engines, the domestic and also the external sectors. If you notice, this is the first time that the net export actually recorded a positive growth of 3.4%. Prior to this, it was remained in negative territory for the past 4 consecutive quarters.
Negative,
right, double digit. So we now in the Q2. that particular growth engines, the net exports, which is the external demands, has managed to actually turn it around. And this is predominantly driven by key sectors like semiconductor-related sectors,
right,
palm oil, and so forth. So it goes to show that whatever happens outside there, now we are seeing some improvement in terms of global demands. So it really been transmitted to our economy directly.
Nice, fantastic news. But what does this imply about the overall trajectory of Malaysia's economic performance for this year, 2024?
So I think it seems that we are on track to grow within the forecast range of 4% to 5%, and there is also a likelihood that we might grow slightly above than 5%. That's what it means. So in a way, we are preparing our foundation to grow for next year.
Yeah.
So we are having, what we have now is we have a good foundation, given that the possible challenges that we might face next year.
Yeah, right. Now, that sounds a little bit scary, but it's okay. Let's talk about specific government policies or initiatives that help spur this faster than expected growth. So were there any implemented by the government, so on and so forth, when it comes to its policies?
Well, I think, like I did mention earlier on, the reform in respect to fiscal policies, I think that could be one of the key factors that drives the growth or the confidence in the economy. I mean, the government has actually initiated with the raising the services tax from 6% to 8% in March. Prior to that, there were the introduction of the low value goods tax, and along the way there is a subsidy rationalization on electricity, and more recently is diesel on the 10th of June, where we saw the price of diesel increase from 2 at 15 cents per litre to 3 ringgit and 35 cents.
Yeah.
So all this actually created the message to the investors, especially, that the government are serious in reforming the economy, and that actually translated into the appreciation of our ringgit. Yeah. If you look at our ringgit on a year-to-date basis, I think it has appreciated about 5% already against the US dollar.
And would you say that this has been overall effective?
Well, I think it's still at early stage. If you look at the fiscal deficits that we are in at the moment, it's still in the range of 5.3% of GDP for the second quarter, 5.7% of GDP in the first quarter. So that brings about 5.5% of GDP in terms of deficits for the government. And the target for this year is 4.3% of GDP in terms of deficit. So what it means is that we shall see further improvements in the second half in terms of government finances that could actually translate into the past, whatever been done in terms of policy reform, will start to trickle down in the second half.
When you mentioned further enhancement, what would you think about plans to introduce additional supportive policies? Would you think that that would be difficult on the netizens? Would you think that it's supposed to be implemented so that we can expect more better GDP growth by the end of 2024, heading into 2025?
Well, I think the context here is to make sure that the government is in the right position, especially from the financial point of view, to have more space, more rooms for them to spend on other things, especially on areas that will improve our productive capacity in the long run, especially spending on the education, healthcare, infrastructure. So these measures would actually allow them to have more rooms. So we can see that more allocation has been redirected towards cash transfers program, the likes of Sumbangan Tunai Rahmah, Sumbangan Asas Rahmah, and of course the targeted subsidies that actually help to some degree, to mitigate the impact of the rising cost of living. And beyond that, of course, the government needs to make sure to have more funds to be directed, to spend on the recent announcements of the salary adjustment for the civil servants. So these are the areas that they can actually benefiting from arising from the fiscal reforms agenda.
Right. Now, when it comes to implementation of all these policies, we can't just implement it immediately.
Right.
And things like that. We have to wait and see the ripple effects, obviously, which we hope that will bring good benefits, not just to the people, but the country. Now, Doctor, we want to know how does Malaysia's growth performance compare to the broader regional and global economic trends. But before that, Doctor, we are going for a quick break and we'll be right back. Stay tuned to On the Table. Welcome back to On the Table. Before we took a short break, I was asking on Malaysia's growth performance compared to the broader regional economic trends. So, Doctor, coming back to this particular question, is Malaysia outperforming in Southeast Asian peers?
Well, I like to say that could be the situation at the moment.
I would like to believe it too.
Right. I mean, if you look at China's economy, it was growing at a rate of 4.7% in the second quarter, which is falls short from the government's target of 5%. And I think in the region itself, I think we are actually on the, in a good state in terms of the projecting the, the image that we are growing at a robust rates, and it has translated into, the appreciation of our ringgit, the rise in our FBMK LCI, although there was a dip recently because of the concern over the unwinding of your yen carry trade on the 5th of August this month. But beyond that, I think foreign investors are quite sanguine about their assessments of Malaysian economy. I mean, we saw JP Morgan recently, revise their country rating for Malaysia from underweight to neutral, and we saw positive assessments made by the credit rating agencies, the likes of S&P and also Fitch. They gave quite a positive reviews, especially in relation to the fiscal reforms measures. So this has been translated into better vibes, better confidence among the foreign investors and the domestic investors. So I think we are on the right track. It's just that perhaps the man on the street perhaps might feel a bit dichotomy in terms of what the numbers are saying and in relation to the what's happening on the ground, especially on cost of living, which I think is true to a large degree. This is where I think information flows on reforms agenda needs to be communicated effectively to the masses.
Nice. But Doctor, question is, what do you think are the external factors that may have contributed to the strong growth?
Well, obviously, we can see that our E&E sector has been growing positively in the second quarter, and semiconductor-related sectors has been the backbone of our exports industries. And this year, based on the forecast made by the World Semiconductor Trade Statistics, they are looking at double-digit growth. So in that sense, we as a country should be benefiting from this trend. And of course, with the proliferations of the artificial intelligence, which we will consume a lot of semiconductor products, that will actually benefits our export sector, especially in this E&E related segments.
Yeah, and truth be told, we spoke about how the GDP of our country is moving forward and we expect it to be even better and stronger. But of course, we have to talk about reality. Let's talk about the key risk or downside factors that could potentially impact Malaysia's economic outlook moving forward. Right.
I think if you look at the narratives in the financial markets at the moment, financial markets have been, penciling in potential interest rate cuts in the U.S. economy, and that actually resonates with the, talks of the, possible recession in the U.S. economy. And U.S. Such a big country, and it has a prominent impact to the global economic growth. So anything happens in the US would actually have a spillover effect.
Yeah, it would just create this ripple effect, and every country in the world would experience whatever they are experiencing, or probably even worse.
Right. That's why I think initially the market was expecting that there could be just 50 basis point cuts in terms of the interest rates in the US. But now I think the financial markets have been, upping their game, upping their anticipation for further rate cuts, more to come, which means also the US economy actually needs some help, So these are the key risk factor, I would say, in the US. And of course, not to mention China's economy, which is, I think, still struggling with the calamities in terms of their property sectors, Market were expecting more in terms of the policy measures to support the economy, but the authorities seems to be very guarded on this front. So, yeah, I think the global growth trajectory, I would say, is somewhat guarded at the moment, given all these developments.
But are there any concerns about the sustainability of this rapid growth pace?
Well, obviously, when you see the economy growing at above that its trajectory, the associated risk, obviously, whether it will translate into inflationary pressures.
Inflation pressures.
Inflation, yeah. So because of the demands, and you can see that our consumption spending has been growing quite a robust rate as well. And not to mention also because of the anticipation of a pay hike among the civil servant also creates the impression that, consumptions would actually become more robust going forward. So there could be a risk that inflation expectation will be higher. And of course, we are still waiting further details on the supposedly impending impact of the RON 95 subsidy rationalizations. So these are the key areas that can actually, it has an impact to the inflation dynamics. So these are the key concerns. That's why if you notice, if you look at the statements by the Bank Negara, I think they are quite concerned over the inflation dynamics, and it is being reflected in their forecast range for inflation of 2% to 3.5%. That's quite a wide range that reflects the uncertainties over the inflation dynamics in the second half.
Let's bring it back to the projections. What are the economists' projections for Malaysia's full year of this year, 2024? GDP growth currently?
In our case, we are still looking at 4.7% growth.
Okay.
But I noticed some of my colleagues in other banks, some of them looking at more than 5% growth. So I'm not surprised, actually, like I said in my earlier speech, that the economic growth for this year might actually surpass from above 5% for this year.
We are hoping for that, I guess.
Yeah.
Of course we do. So, Doctor, how do you expect this better than anticipated Q2 of this year's performance to affect Bank Negara Malaysia's monetary policy decisions?
Like I said, because the central bank, they will always look at two things. They will look at the growth and also inflation. At the moment, they are still focusing on inflation. Yeah?
They are focusing on inflation.
That means they need to ensure that their monetary policy stance will be aligned with the current economic conditions. If you remember, in 2022, up until last year, the overnight policy rates was raised from 1.75% to 3%, simply because inflation was rising, economy was growing and recovering, and they have been maintaining such rate for quite some time at the moment. So at the moment, it seems that 3% is all right. It's okay given the current economic conditions, but nevertheless, they are still cautious about the inflation dynamics. In that sense, I'm not also, ruling out, a possible adjustment in the OPR, outward adjustment, because if they feel that the inflation is still high, there could be a room that Bank Negara might actually adjust it upwards. But I think at the moment, 3% it seems to be the right level of monetary policy supports.
No, Doctor, you just answered the next question that I'm about to ask you, because obviously when it comes to changes in the interest rates and OPR is concerned, definitely there will be, right? We're talking about exchange rate management or even other policy tools. But what can you take, when you take a look at this picture, how are we supposed to do better in any sense possible to just move forward? Because maybe people would be afraid of this OPR being raised to 3%. And the question is, when would it be actually brought down? Could it even go higher? Those are the concerns of people.
True. Yeah, I think we need to take a few steps back, obviously, because because if you talk about policy making, it's just not monetary policy. There are other range of policies being put forward to develop the economy, education policies, healthcare policies, and many more. And of course, monetary policy is always been at the forefront because it's being highlighted in the news, highlighted in the financial markets. That's the reason why they always get the limelight, so to speak. But in actual fact, there are other policies in place to develop our economy. For instance, like, since we are noticed that entrepreneurship has become more and more, being embraced by our citizens. insentif pendapatan rakyat, for instance, IPR, it's always been there, to promote entrepreneurship. So many things more in terms of policies that would actually help boost up our economic development. So, but not just, monetary policy. So I think with that in mind, I think perhaps we can actually better manage our expectations.
Nice. Okay, Doctor, coming back to the Q2 performance of 2024, we would like to understand more on its data and also the implications for businesses and investors and consumers in Malaysia. So what do you think are the implications of businesses and investors right here in the country?
Well, I think, like I did mention in my earlier assessment, is that if we can see that the turnaround in our ringgit, dollar ringgit especially, is quite significant. Yeah, I think on a year-to-date basis, dollar ringgit has actually appreciated about 5% against the dollar, US dollar. So we also notice some inflows of funds from abroad that obviously help support our ringgit, and you can see that our FBM KLCI is at one point is moving closer towards 1,000. A higher range of 1,600 points. So I think foreign investors are sanguine about Malaysian economy.
Yeah.
I mean, it has been quite at a lackluster stage for quite a number of years, but this year, because of the reform agenda being implemented, I think they are starting to revisiting their investment thesis for Malaysia.
I think the investment thesis for Malaysia, it happens to every other single countries as well. When it comes to investors, foreign investors coming and invest into a particular country, there must be some form of concern, especially what you just mentioned with what's happening here in the country. These are, I would say, normal stuff that is happening. But let's talk about sectors or industries that are likely to benefit from the accelerated growth of this whole thing altogether. What do you think it is?
Well, I did mention about construction sector.
Yes, construction
You can see that how data center construction has been the main driver of the sector, and we can see that property players also venturing into this space, and that creates the excitement in the stock markets. And I think beyond that...
and I think I just read, and it says household as well, household items or some stuff like that. That could be
right. I mean, if you take into considerations of the labour market conditions, is still stable. I mean, we are still in what we call a full employment status. That would allow people to spend, and that would actually benefits our automotive sector.
Automotive sector, okay.
I mean, recently I've looked at the revised forecast revision made by the Malaysian Automotive Association. They were looking at a total industry volume of can't remember what's the number like, but I think they have revised up their forecast more than 700,000 units in terms of the vehicles sold for this year. So on that note, I think given the stability in our interest rates and better labour market conditions, I think automotive is one of the key sectors that could actually, seeing some better growth this year.
All right, Doctor. So unfortunately, we are running out of time, but very quickly, very quickly and briefly as well from you, Doctor. What do you think Budget 2025 is going to be for all of us with the upcoming one that's going to be soon, Parliament and stuff like that?
So I think the mode is still to make sure that their fiscal deficits will continue to narrow down. I mean, this year the target is 4.3% of GDP. Perhaps next year they are looking at 3% of GDP. Still, by nature, is still expansionary fiscal policy, but I think they will be more careful in terms of managing it. And therefore, on that note, things like subsidy rationalisation will be the main one of the key areas. And of course, beyond that is how we can government become more, the growth engine for sustainability.
Okay. Thank you so much, Doctor. Unfortunately, that's all the time we have right now for this edition of On the Table this evening. So we've been talking to Dr. Muhammad Afzal Nizam Abdul Rashid, Chief Economist of Bank Muamalat Malaysia Berhad. Thank you so much for being here once again, Doctor. And of course, a repeat of this particular episode and broadcast can be viewed again at the same time tomorrow and subsequent days on both RTM Click and MyTV's Berita RTM channel, which is also live streaming on YouTube. Till next Thursday, where we'll delve on another topic of interest. Till then, I'm Brendan Lepal signing off. Good night. Take care.